Alrighty, good morning, traders. Today is Friday, March 12th. My name is Charles, and this is the Pirate Traders live stream. Okay, well, bear with me this morning. Normally, I prepare myself before I start to stream with what I'm going to talk about, but I'm running late this morning, so I haven't had a chance. Okay, so what happened yesterday, really quickly? We had a gap higher. We had a straight push up and then a little bit of short covering. We had a small pullback late in the day, but nothing, shock and awe-ish, just a simple little rotation back down to repair the single prints that we created. Finding support right at the, I forget, this I marked afterward. I forget what it was that was giving us support here, but we found support a few ticks below that. Okay, so nothing to worry about there. Relatively bullish activity. Value is higher. Overnight activity is about 75% short. We are going to open inside of yesterday's range. So that tells us that there's a slight increase that the market wants to push up because the overnight activity is down, at least initially in the first few minutes, and that we will likely just have chop in the beginning of the day. So today will probably be one of those days where I don't take any trades for the first hour or two of the day because the market will just need to grind around and chop. Okay? The important things to keep an eye on this morning. The gap, right? We filled the gap in the overnight, but that doesn't count unless we do it in the regular trading hour session. So there's pretty good odds that the market, since it's this close to the gap and it looks like we're going to open right on it, that the market will fill the gap to the high from 2 days ago. So that's 39.0650. Okay, if that gap fills, what happens at that point, right? Does the market find support here? It could be anywhere from that high to the low of the overnight here. Does the market find support and start to work its way higher, or does it fail? Does it crash through, come back up to these levels, and then they become resistance? If they become resistance, I would go short with the trade for a continuation down. Okay, as far as the market going up, if the market goes up, the first lines of resistance to expect to see would be the halfback from yesterday and then the POC sort of area, this node of volume. So again, if we get up to this area and then it becomes resistance and the market can't get above it, that's a short. If it gets up to this area around the 39.42 area and it finds resistance, that would be a short as well. Okay. Odds are telling me that probably the market will rotate today just because we're opening inside of yesterday's range. We're in the lower end of yesterday's range, and we just have had so much excess in this move. Value is much higher yesterday than the previous day. So the market may need to balance. All right, market internals opening a little bearish. Nothing to get too scared about, but just a hair. Good morning, Dr. Vijay. Haven't seen you for a bit. Where you been, bro? Good morning, Phoenix. Good morning, Fausto. Good to see you guys. Also somewhat noteworthy, the POC from 2 nights ago, the opening price of yesterday, and the closing price tonight of the overnight, and the opening price of today. They're all in the same area. So this will become an important area to watch as we move forward. If the market sells off, finds support, getting back through it would be very bullish for continuation higher, and vice versa. If it pushes up and then pulls back down, this could be good support. Okay, looks like they're going to fill that gap. Once again, very important to remember, when you open inside the previous day's range, you often get a lot of chop. Neuro linguistic programming. Love it, bro. Good morning, Angelo. Good to see you. Steve Z. TGIF, man. No doubt, John. I feel you, brother. Today is your day. We're all behind you. The thing I would think about here is if the market, fills the gap and doesn't have any further downside continuation, it finds support, we're probably going to have a rotational day. So those are easy days to trade if you're patient and you wait. Lahab, I feel like you just copy and paste that every day. Where's the nearest support? It's a perfect question. The gap, obviously, where we just bounced off of, is the first line of support. That gap is now filled. The next would be the overnight low. then it's a little bit tougher to target, but it would be somewhere inside this node of volume right here from a couple days ago from the 10th. So, you know, POC is a good target, halfback's a good target, anywhere in this range likely to become support. If this breaks, you can expect much further downside continuation. Okay, market internals remain a little bearish. Still a bit too early to say with them, though. Normally, I would delete this pullback low since we opened in the regular trading hours before it, which is essentially a repair. But I'll leave it there in case it becomes resistance on the upside, just because there's this little node of volume right above it. Brady, good morning. Welcome. I was just going to say, well, I think it's safe to say that the volume has moved to the new contract. I just looked at this and was like, what the fuck? And then I remembered, oh, yeah, it's because everybody switched to the new contract today. Okay, so far we found support on the high from yesterday once we filled the gap. This is an amazing taper right here, but it's acceptable for it to be a good low. Not saying it is the low, but it could be. Market is pushing its way back into yesterday's range. Herman, good morning. Welcome. Yeah, no doubt. But Thinkorswim's not the only platform. There's a lot of others. But yeah, I think most people wait a day or two before they switch. I bet a lot more will switch on Monday. Okay, well, we're not quite getting the type of grind that I expected. So it feels like dips might be buyable here. I would be watching, the opening price, maybe the halfback as support, with a stop below the low of the day. Um, Actually, I would say a stop just below the low of yesterday. Although the NASDAQ is starting to sell off, so maybe wait, let it grind out a bit more. Yeah, I think that's smart, Fausto. Any day that you open inside the previous day's range, the smartest move, if you have the patience to do it, is to sit on your hands and let the market work itself out first. Yeah, market internals are slowly starting to creep into bullish territory, getting above the zero line, but not in any kind of impressive way. So I do think that this move finds resistance somewhere and then rotates back down, probably to about, this area here around the 39.16 area before it pushes any higher. We could find potential resistance in this little node of volume. I'm going to go ahead and delete this. This isn't important anymore. Around 39.26. That's a little spot we could find some resistance for a rotation back down, which could be a buyable dip. And then also the POC from last night, likely to be resistance because it's so prominent. Actually, for overnight, 12 is not that prominent, but there's a big node of volume here. Otherwise, it feels like a fill the gap and go. Okay, week B period high because it's one tick from the A period and it only has 12 contracts. So that increases the odds that it will be revisited. And we are now one time framing higher. So we definitely obviously have some new viewers here today, more so than normal. So just let me know if you guys have any questions. There is no stupid questions. If you're new to Market Profile, and you're like, what am I looking at? Is this the Matrix? Like, I'm so confused. Just ask questions and I'll be happy to answer anything you're curious about. Correct. Yeah. Each TPO on the chart represents 30 minutes. So it's the same as like a 30-minute candlestick. Also, my TPO, which is this little, or not TPO, sorry, my POC, which is this little green line, is based on time, not volume. Yeah, so this level here, 39.32, or just a little bit above it. I think what you're looking at is this line here. That is the POC from the overnight session. Okay, so basically the way my charts are broken up here, the purplish looking ones, the like reddish ones, that's the regular trading hours. So when the market is open in the United States, and then this is the overnight session. So that's where it trades in Asia and Europe and so forth, whilst we are asleep at night. And so this is the point of control for the overnight. So that's where the market spent the most time during the overnight session. Why do we care? Because the reason the market spent so much time here was there was a lot of traders who had differing opinions, right? Some are going long, some are going short, and they were fighting against each other over and over again. And you can see there's this little note of volume there too, which corresponds with it. So they were fighting the good fight around this area. So when the market pushes up to there, it just increases the odds that some of those people are going to do something with their position, right? If they went short there, they might exit at these levels because they're thinking their short's going to lose the money at that point. So they want to get out. They want to cover it before they start to get into their losses. If they went long, they might add to their position, or the fact that we pushed up to this level means they're, confident. So they're not going to be weak hands. They're going to keep their position, so on and so forth. So it's just an important level to keep your eye on. Maybe nothing happens. Maybe we go right through it, but it could become support resistance. And then the same thing is true for yesterday's point of control from the regular trading hours. Stan. Dude, I love you, Stan. Thanks, bro. I feel good about myself. That's funny. But yes, please smash that like button. Show me some love. Um, Yeah, I mean, I don't really, in the question about would I take trades if we entered yesterday's value, I'm already long the market here, and I'm monitoring for continuation to the upside. So I'm basically waiting until I think the market is done going up and is going to start coming down, and then I exit my trade. So I don't really see anything particularly interesting about re-entering yesterday's value area. Um, What is more interesting to me is the look below and fail of exiting yesterday's range, right? We opened inside of yesterday's trading range. We looked below it and then failed by coming back up into it. And that just increases the odds that we're going to work our way to the opposite end of the range. Also, the fact that we have these 2 week references, they need to be repaired. So that just slightly increases the odds. The only thing that's working against me is these lackluster internals. I haven't quite changed myself to a really bullish stance, thinking that the market will trend higher, just because those internals kind of suck. So the market might need to spend some time rotating around before it gets up there. Okay, my stop just filled. I had put my stop a tick above break even on my long, so now I'm out of that trade. So now I would say I continue to be bullish as long as we stay above yesterday's low, right? Because that's the look below and fail higher, which increases the odds we go to the high of yesterday's range. So we'd have to break this level for me to now go bearish, right? And then once with the C period prints, which is pretty far from now, it's like 20 minutes from now, I'll be watching for one time framing as well. Happy life. Good to see you. Welcome. My pleasure, Daniel. Stan, I know I don't trust it. I went to bed last night with 350. Just to be clear, it took me like 8 months to get from 0 to 300, and I went from 350 to 400 overnight. So I think something's up. Am I on MES for what I'm watching here? No, this is the ES. I trade both the ES and the MES. Right now I'm in the ES with my trades, but I trade both. Yeah, right now I'm trading the ES today. I've had a couple lucky days, couple profitable days, so I've got some extra powder to play with, a little more confidence. Don't need to be in the ES. I mean the MES. Oh yeah, bro. I don't care about that profit on the long. That's nothing. There was one trade I took yesterday. I forget where it was. Yeah, I forget where I got in and got out, but it was somewhere in the A or B period, and I got one contract on the ES and just left it like the whole way up, and it kept grinding down. I just left it, and I got like $1,000 off of one contract. And I was like, dude, it's just a reminder to be patient, let time do the work. If the market is bullish, if it wants to go up, just wait. I wish I wouldn't have gotten stopped out of that trade though. It'll be easier in the C period because then I'll be able to use one time framing as a stop. Yeah, Phoenix, no worries, bro. There's no such thing as a broken record here. I literally just say the same things over and over all day, every day. So yeah, if the VWAP is working for you, share it, my friend. Yeah, that's a great observation, John. You remind me a lot of me like a year ago. um, yeah, no doubt. That was my biggest problem always was I learned early on that I had to accept losses, right? That being able to sit and watch the market go against me and accept losses was like part of the process. But then I kept having this thing where like as soon as I was making profits, I had to exit. Like I had to take my money right away. And so it's like I would have these, my losses would be huge because I would let the market go against me forever and be like, it's going to come back. It's fine. It's going to come back. And just let it keep going against me. And I have this, then I finally give up, get squeezed out, have this huge loss. And then like when I had a winning trade, I just take the profits right away. So that's what I work on now is trying to cut off the losers very quickly. When I'm wrong, just get out of the trade. But then the winners, just sit back and let them run. Let them bring me profits. Yeah, Philip, having a little bit of trouble understanding your question. Um, in terms of like time intervals, it's just the TPOs, the letters here, those represent a 30-minute time period. So it's the same as like a 30-minute candle on a regular chart. Okay. And then the difference between the two colors is this is the overnight trade. So this starts at like, I don't even know what time overnight opens, 1:30 p.m., something like that, till right at the open of the regular trading hours. And then this is just the U.S. markets regular trading hours. Okay, internals have gone back to bearish. I'm going back to neutral. I don't trust these internals. Again, there'd be absolutely nothing unusual about the market just grinding around today and just moving sideways because we've had a lot of excess. We also made a new all-time high yesterday in the market, and a lot of times that brings in sellers and stuff like that. So the market has to kind of churn its way through, find some balance, and then it goes back to creating more excess to the upside. Design knob. Yep, that is exactly a description of my process of learning to trade. No doubt about it. What do all the symbols mean? Yeah, I can run you through that. So basically, what the market profile chart is it's just taking the same information that you see on these candlesticks, and it's just making it three-dimensional for you to see. So you can see time, price, and volume all together in this one little knob. It's basically turning it into a bell curve. If you just Google a bell curve, you'll see that a bell curve is like a system that scientists have used for a couple hundred years as just a way to analyze data. So all this is just a bell curve on its side. And that just makes it easier for me personally. Some people don't like market profile, but for me, I find it easier to read than the regular candlesticks. Right? Like if this was all I had to look at right now, I'd feel very bearish, right? I'd feel shitty, like, oh no, the market went up and now it's going to sell off, and how far is it going to go? And I'd have all these fears and uncertainty. But when I look at it in the bell curve shape, I feel more comfortable. I kind of know, okay, we're building volume here. This is good and healthy. It's giving us support for a push higher, stuff like that. So that's the idea behind using the market profile instead of the regular candlesticks. It's just, for some people's brains, this is easier for pattern recognition. What you're looking at here, there's actually two profiles sitting right next to each other. The one is expanded out and the other one is collapsed in. So all the previous ones I just have collapsed because I'm only looking at the shape of the bell curve. I'm looking at the shape of the profile. But in real time, I like to see each individual 30-minute period. So just to give you an example, if I were to expand out yesterday, that's what it would look like if I looked at every single 30-minute period separated out. So during the live trading day, I have both right next to each other. So that's why you're seeing duplicate letters over here for the A's and B's. It's just one's expanded out and one's condensed in. Okay, over here, this little section, this is the volume. Okay, the numbers are the actual number of contracts that traded at that particular level, and the like candlesticks that are on their side, that's the volume, visually in a candlestick. The red colors, that's where the most volume is trading. The pinkish, that's like the medium, and then the white is the least volume. I don't really look at the numbers that much, to be honest with you, except at the highs and lows. I look for taper, and I look for good highs and lows. So for example, 11 contracts at the high here, that's weak to me. The market has to come up and do some more trading there before that's a good high. Just assume there's more than 11 people that want to trade at that price, basically. What else to tell you? In market profile, this little blue shaded in section is called the value area. And the value area is basically just wherever 70% of the day's trade takes place. Value is, without doubt, the single most important thing in market profile. This is the magic right here, particularly over a longer term basis, over like a swing trading basis, because wherever value moves, price generally tends to continue to move in that direction. So looking back, so we had value was lower, and then the next day it was overlapping to slightly higher, right? So that tells us it's either going to go sideways or up. So then the next day, the value was much higher, which increased the odds that we were going to go up. The next day, the value was higher, which increased the odds that we were going to go up. Then value was overlapping to higher, which increased the odds we'd go sideways or up. Then value was way higher, right? So you can see that that's how trends are much more reliable in value than in price. But another thing to be noted is all this excess, right? All this distance between value from yesterday and the day before, that's what we call excess. And in markets, the way they normally trade, excess has to be balanced off. It's like the law of science. I can't explain why it is, but it always is every time. So we just created a lot of excess, so now the market needs to balance. What I would expect to see today is like we churn around down in these levels as long as we have to, and then we work our way higher, and then by the end of the day, this blue shaded in area is just overlapping this one. It's tough to say though, and if we break yesterday's low, that could bring in bears. So I'm keeping a close eye on that level. It seems like it's the NASDAQ that's pulling us down. Yeah, market internals are getting weak, very weak. Could lead to further sell-off. Yeah, this particular software that I use is called Window Trader. It's window spelled without a W at the end. Window Trader. You have to pay for it and you have to pay for the data, but there are a lot of different services. I think somebody said NinjaTrader can do it. Somebody said Sierra Charts can do it. So there, if you just Google, whatever service you use, do they have market profile? You can find it there. I do look at the overnight profile right before I start to trade, first thing in the morning. So I usually get up and sit down in front of my computer at about 6:15, and then I spend about 10 minutes just looking at what happened yesterday, retelling myself the story of what happened yesterday in the market, and then what happened in the overnight. How did they react to yesterday? So, for example, their value area was overlapping to lower, right? Which increases the odds of going sideways or going down. I'm looking at their highs and lows, and I'm looking at their POC. I'm looking at the overnight activity overall. So, see how the overnight, for them, this little green dot, by the way, is where the market opens. And the little green rectangle is where it closes. So they opened here and closed down here. And their trade, most of it took place down here. I would say about 60% of the trade. I'm literally just looking at the number of letters that I see. 60% of the trade took place down here, about 40% up here, right? If it was 100%, that would give me a signal that we'd have a counter auction. We're about to break that low. Dun, 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 dun. Here come the sellers. So yeah, I do look at overnight. Actually, I've got a link I can post. Give me 2 minutes and I'll post a link to a little I wrote up a thing explaining how I look at overnight activity. Okay, so this is an interesting little scenario that we have here. The B period is now completely engulfing the A period. So that's just a sign of the market not knowing what it wants to do. This is a moment that I would just step aside and let the market work itself out. I'm not going to try to jump into a trade here. But the B period low is now weak because it is one tick from the A period low, increasing the odds that it will be revisited. Okay, you can see now just learning to look at the nuances. The value area just got pulled lower. That's slightly bearish, right? The POC just got pulled lower. During the A period, it was here. During the B period, it was up here. Now it got pulled down here. That's a little bit bearish. Absolutely. If we are rotational today, which is what I think is happening, then you'll get a rotation back up above the value area. Get you above 17. Stan, of course, man. Thank you. I was just kidding. Philip, market internals. That is this screen right here. This little quad screen you see. It's the breadth, the advancers versus decliners, the ticks for the NYSE, and the ticks for the NASDAQ that I've got on here. I learned this from a channel called Shadow Trader on YouTube, and I would suggest you go there to find videos on how to read this stuff. I'm not as good at this as I am with the market profile. I just kind of keep an eye on it as a secondary, second opinion on what's happening. These all look at the underlying stock markets. So it's like these ticks, for example, are how many people are buying and selling the underlying assets as opposed to the futures. RJ Wheel, solid joke. He Harry making it. Something the indicator did something bad, but we don't know who. He won't say who. John, you can sign up for TradingView, which is like the software that I use for my charting, for free. And I think you get to put, I don't remember how many it is, but I think you get to put like 3 indicators on there. Hold on 1 second. So yeah, it looks like this right here. And so this is just like a separate software that you can it's all done online. You don't have to download it to your computer. And like I said, you can put I think maybe 3 indicators on it. But yeah, you can put your VWAP there. They've got a great one that includes the bands. So this is the VWAP with the bands, so that you can see where to enter and exit. Yeah, I don't look at VWAP. I used to trade off of VWAP when I was a scalper. Um, but I just learned that for me, with my trading, I'm much more successful when I absolutely simplify it down to the most basic stuff. So now 90% of my analysis is based on just the market profile and the regular 15-minute candlesticks with the 20 moving average. It's shocking how much easier it is to feel confident in your trades when you're not looking at 50 indicators. But yeah, VWAP is great, and that is what the big dogs look at. If you're a trader for Goldman Sachs or whatever, and they tell you you have to, get this big of a position today, you're going to always try to buy under the VWAP and sell above it, and so on and so forth. So it's a very good indicator. So to me, this is feeling like a rotational market, right? We got the push off the poor low higher, and I suspect we'll find resistance somewhere around this halfback and then start a rotation down. Market's just balancing a little bit. I would rather go short above value and take profits at the POC, and then go long below value and take profits at the POC, than try to do any kind of trend trade at this point. What do you mean? How come there aren't any C's? I sees lots of C's right here. You like that? I just hit you with a pun at like 7 o'clock in the morning. Um, 39.42 on March. I guess that would be $10 more than this contract. So 32. Oh yeah, no doubt. We'll definitely probably come up and tag the POC from overnight. Market's just got to rotate a little bit first. I also wouldn't want to leave a poor high. I mean, sorry, a poor low behind. I'd rather come down and repair this first and then rotate up. No, it's not optimistic at all, right? If my guess of what's happening in the market at this moment is correct, right? That this is just today will just be a day to balance off all this excess that we've created. I mean, just look at this. Sorry, give my data a second here. I mean, it's just straight up. Bum, 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 bum. You know, we're above the previous balancing area now. So the idea of needing to make a new balancing area and the market to spend a few days kind of bouncing around before another up move, totally natural. So if that's what's happening, then yeah, getting up to the POC is no problem. The POC from overnight. It just won't happen fast. It'll happen on this slow, boring tempo. All right, well, the D period looks like it wants to go down and repair this poor low that we have here. So the question that we'll be asking ourselves once it gets 2 ticks below the B period low, oh, it might rotate up. No, man, this is such a rotational day. Created another weak reference. Yes, sir. So when we get down and repair this poor low, we'll be watching the low of the overnight for support. As long as it doesn't get below that, that's good excess for a long trade to rotate back up to the POC. But they didn't give us a chance. They started rotating right away. So this is a sign when you start to see these weak references stack up like this. It's just a sign that the people who are trading here are short-term traders. People like you and me, retail traders. And we call ourselves weak hands traders. It's not an insult. It doesn't mean there's anything wrong with us. We're big, tough, strong people. But we call ourselves weak hands because we have to exit our trades during the day, right? So if you went long right here in the D period because you were looking at this line right here, right? You were putting yourself a little trend line and you were like, ooh, I'm going to buy right at the trend. At some point you have to take profits. So that just means that you won't hold it indefinitely. So there you go. Already repaired that D period that was weak, and now it's on its way to that poor low. We are pulling value area a little bit lower, which is slightly bearish. Okay, so I'm not going to say this to be braggadocious in any way, but just to kind of explain how the system works. So I waited until the market got below the value area, and I went long here at the D period. And then when we had that sharp push higher, and then we started to find some resistance, I just went ahead and closed it out. So I made $400 off of 2 contracts on the ES. It took less than 30 seconds from my entry, or maybe a minute and a half from my entry to my exit. And the reason I was able to do that was because I sat patiently all day, waited till I was certain what was happening, that the market was in rotation, and then I knew my strategy: go long under value and go short above value. Right? So that's just not to brag, but just to tell you guys that's why we do it the way we do it. I have no problem missing the trade that I got stopped out on up here because I was uncertain about what was happening in the market at that moment. Now I feel like I have some certainty that the market is just rotating up and down, so I can implement my strategy with more confidence. Once again, the fact that we created another weak reference right on top of the previous one is just an indicator that this is not big money, smart money that are buying this right now. They're stepped aside and they're just letting us short-term traders pick each other's pockets. It's basically people in their living rooms versus computers, algorithms. Yeah. So, woo, boy. Sorry about that. Yeah, on a rotational days, it's really tough. That's why I try to be patient enough to wait for it to get above or below value, because it's really hard to pick a support or resistance inside the value area. It can just turn around anywhere. Um, so sure, I mean there could be a million opportunities if you try to go long inside of value for rotations or whatever, but it's much easier to just wait. Absolutely, Philip. My pleasure. Stan, congratulations. Good trade. Is the NQ1 time framing? That's a great question. Whoa. I'm all over the place. So yes, the NQ is one time framing lower right now. But again, it's not as powerful a thing unless it's from the start of the day. So the fact that we didn't one time frame in the first time period, we had this like engulfing, same as the ES, we had this engulfing. That just tells us psychologically what's going on in the market is balance, right? So you could call that anything you want. You call it uncertainty, right? You could just say there's no leadership in the market. You know, half the people want to go long, half want to go short, whatever. But there isn't a trend. The market is just balancing. So yes, technically since then we are trending down, but this all just feels like balance. And interestingly enough, the poor low is on the NQ as well. So that increases the odds that you have a push away first and then you come back to repair it. That's on both indices right now. Again, just a further sign of rotation. No, you can't get market profile in Thinkorswim. I use a separate program called Window Trader. You can just Google it. You'll find there's a million different people that have market profile. I think Thinkorswim has something, and you guys can jump in the chat and help me with this. I think it has something called like monkey bars that is very similar. Like it shows you the high and low of the value area. And then there was another thing you could add to it that kind of makes it almost like market profile, but it's not exactly the same. Daniel, I'm having a little bit of trouble understanding your question, but basically what you're looking at is just a market, as I just said a second ago, it's just the market balancing, right? It got above the A period high. It ran out of buyers. The market is constantly in a two-way auction process. So just nobody else wanted to pay this price. So the market pulled back down. And then a bunch of people wanted to pay this price down here. They felt like, ooh, this is a good deal. So the market went back up. And that's all that's happening here. Stan. Yeah, I know that feeling. Yeah, no, for real. That is how it works. Like I keep reminding people that like when I first started learning this system of trading using market profile, I took a course with Jim Dalton, and then at the end of the course, I spent like a month trying to trade market profile, still not having any clue. Took a second course with Jim Dalton, and then I felt like, oh, okay, now I'm finally starting to understand it. I then committed to another month or two of trading with it, and then it really started to click and make sense. So then I took a third course with Jim Dalton, and then it was finally by the time I got done with that third course that I was like, okay, cool. I now have like the base understanding, and I just need to put in the time. And it was probably another 2 or 3 months after that of trading the profile before the things really started to click. So I know that that's scary to hear, but I'm a very slow learner. So it just took me a long time. But don't expect to understand the concepts deeply right away. It takes time. But once you do, it is really like a light bulb moment where you're like, oh, fuck, the market just does the same shit over and over and over again. And as long as I can recognize what it's doing, I can come up with a strategy to trade it. All right, the E period is weak because it is at the same level as the D period high. E period low, I mean. And the way that these weak references kind of stack up is one weak reference doesn't mean much. It does slightly increase the odds that the market will revisit that level, but it's not that big of a deal. But when you start to stack up multiple weak references, it becomes exponentially more likely. So like 2 weak references really increases the odds that we'll take out the first one. If there were 3 or 4, it would like really, really increase the odds. Does that work for you guys? Is that a technical? Really, really increases the odds. So yeah, we just keep an eye on these weak references because the more of them that stack up, the more relevant they become. Philip, to answer your question, the short answer is yes, right? Markets are random. Anything can happen at any moment. Somebody with deep, deep pockets could just decide they feel super bullish on the S&P 500 today, and they want to buy a bunch of futures contracts, and anything could happen, right? But we'll recognize it as it's happening, right? We'll know something's up because suddenly we're no longer balancing. We'll break our high. We'll continue to move higher. We'll leave a bunch of weak references behind. So then we'll say to ourselves, wait a minute, something fishy is happening here. Maybe I need to change my strategy, right? Now I no longer think about us as a balancing day, and I start to think about us as a, trending day. So, yep, anything can change at any moment, and that's what we look for, is that change. And Philip, I just realized as a visual example of that, you can look at the overnight, right? So the overnight trade opened here and the market was grinding around, and then, actually let me expand it out so I can get even more nuanced. So the overnight trade opened, right? And it just grind around, it moved up higher, it comes down, it grind. And then you get these single prints right here, where this is that's what I'm talking about. If we suddenly see a change in the market, somebody somewhere realized they wanted to be short the market and they gave it a push, boom, lower. And that change taking place changed the opinions of all these people that were doing trades, right? Anybody that got short in here was like, yay, I'm going to add to my shorts because they're profitable and I feel good. Anybody that was long is like, oh shit, I got to get out of my trade. And they're exiting on the market, which is bringing more downside continuation. So yeah, we're always looking for that change. And one of the easiest ways to see it is single prints. That is a TPO that is by itself. They can be, but they can also be the exact opposite. Sometimes you get, it's a tricky thing to try to explain, but sometimes, yes, it's bigger money changing their positions on a larger scale. And sometimes it's emotional traders, weak hands traders who just get super excited and they just got to buy it. And it creates all those single prints. That's what happened to us yesterday in the regular trading hours, right? During the trading day yesterday, we had tons of single prints that we created during the morning, but they were emotion. Yeah, it was in the C period here. So this whole C period from here to here was single prints, and D period from here to here was single prints. And so it was like, is this a change in the market, or is this just super excited, exuberance and people getting, overly long? And then we figured out, boom, that is what it is. Too much emotion, too much excitement, and the market had to retrace. But as soon as it filled those single prints, it was good. It stopped going down. Okay, so the market is giving me some mixed signals here. Normally I'd be short right at this moment because we're 2 ticks above the C period high, which is good excess. We're above the value area, and today is rotational, right? So I'd go short right here to rotate back down to the POC. But I'm looking at the market internals and they're starting to trend up, which is a counter argument. So what I think I'd rather do is I'd rather wait for the market to push up to this moving average and then short that if it becomes resistance. Might require me to be patient, might even miss the pullback, but it's just a better risk reward. So I think I'll wait for that. Jake, I assume that comment was meant for a different chat. We're not talking about anybody's health here, except for the health of the people whose money we're taking. Sucks to be them. Okay, so the question of is the POC from last night still in play? Yeah, absolutely. So when you get a balancing day that starts off early like this, I can't give you an exact percentage of the time, but sometimes you get a balancing day that, let's just call it 50-50, right? Sometimes they balance for the first part of the day, and then you get a spike or a sell-off at the end of the day that takes you to a new area, and sometimes they just balance all day. So we don't know yet which it's going to be here today. But the strong market internals make me feel like whenever it does make its move out of this range, it won't be to the downside. It'll be to the upside. So I think even if we get a little bit of sell-off to come down and repair this weak D period low, we probably won't get much further than that. We could, but I just don't think it's as likely. I think that we're more likely to push up to here. But as far as when that's going to happen, is that going to happen in the next 2 hours? Is it going to happen at all today? Is it going to happen on Monday? I don't know. I have to wait until I see it break out of this range. Then I'll know. But yeah, I think the market wants to go higher. I think this is just balancing off all the excess we've had. We got super excited. We made way too much money too fast. And now the market needs to cool off. Thanks, Daniel. We'll see you next time. No worries, Jake. That happens all the time. And I can always tell because it's some random thing that doesn't make sense. Like some people be like, no, cheeseburgers taste better. And I'll be like, what are you talking about? Stan, bro, it's too early for pizza. You should have said, damn, those scrambled eggs taste good.
Thank you for the correction, Stan. I was a little worried that you go to morgues to buy your food. That was a scary moment. Or not morgues, mortuaries, whatever they're called. Yeah, I just Googled it. The nearest Casey's to me is in Montana. So just going to have to take your word for it on that, Stan. Jonathan, good day. Good to have you. Welcome. All right. This F period is still weak. We got to get 2 ticks above the E for it to be a good high. And then keep in mind the moving average is pulling its way down. So that is going to be an excellent point to find out if it becomes support or resistance. Or I'm sorry, if it becomes resistance. And if not, if the market pushes through it, does it pull back down and become support? If that's the case, it's a great long trade for a continuation up into yesterday's balance. But let's not get ahead of ourselves. It's more likely it will become resistance for a rotation back down. When you say Fausto, when you say it's in a whole different place, do you mean in a whole different place from the one that is only regular trading hours, or the one that includes the overnight? Because on my other screen, I'm looking at the one that includes the overnight, and yeah, we're way above it, been above it all day. As a matter of fact, the 20 is now crossing the 50 to the upside, which is bullish. But if we're just looking at those regular trading hours, it should be similar. Yeah, that's why I use SPX and NDX instead of the futures here, is just because it only calculates the regular trading hours. The overnight it ignores.
Okay, so we are rejecting off of that 20 moving average. So does it lead to a rotation down or not? Do we push up against it again? One thing that Jim Dalton talks about with these type of things is pretty much any resistance is that he calls it a semi-permeable membrane. Imagine just kind of like poking away at it, poking. Eventually it breaks and you get through. So that's what I'm watching now. And then once we break through, does it find support? That would be a good long trade for a continuation higher. But as long as it keeps bouncing off, it'll likely just lead to another rotation down. John, don't listen to Jonathan. and don't have that attitude, bro. As soon as you're saying things to yourself like this is where I lose money, you're sending a signal to your subconscious to be afraid to get into a trade. Confidence is key. So you're up by 80, now it's time, or up by 60, now it's time to get up by 120. And once you're up by 120, it's time to get up by 240. Just keep crushing it, bro. Stay positive. Jonathan? Yeah, I agree with you. I haven't looked at Bitcoin today. Back down to 57. But yeah, it's making higher lows. It's on its way. I'd love to see 60,000 by next week. You think I'm crazy? I say maybe. Yeah, the NDX has been a hair weaker for the last few weeks, but actually yesterday and today they seem to be moving in sync again. I mean, you can literally just look at the candlesticks. They're almost identical. Not exactly the same range, but pattern-wise. All right, taking another stab at this 20 moving average, poking it again. Are we going to poke our way through? Really, Jonathan? I never noticed that pattern. I guess it makes sense. But yeah, I never actually noticed that with BTC. Okay, so now we're above that 20 moving average. So do we fall back under, or does it now become support? If it does, that's a good long trade to the upside. Right? Looking for a rotation back up into yesterday's balance. Or I'm sorry, yesterday's value area. Yeah, there's another book. I'd have to Google what it is. The guy's name is Joe Dispenza or something like that. Yeah, breaking the habit of being yourself. That's what it's called. Yeah, this book right here, Breaking the Habit of Being Yourself, is the best book I have ever read in my life about learning how your brain works and your subconscious controls the decisions that you make. I will warn you, if you buy it and you read it, it does read a little bit like it's woo-woo shit, and you got to kind of just let that go. He's a neuroscientist. Everything is based on actual studies and stuff like that. But the way he talks about things, it has a little bit of like a woo-woo vibe. But if you get past that, it's fucking so informative to understand how everything you do is based on patterns that were created in your childhood and exist within your subconscious. And you don't even know. You've no clue every day why you do the things you do. And, anyway, I found it to be a great resource. Okie dokie, we're above that 20 moving average. We tested it just slightly. We'll have to probably come back down and give it another test at some point. But I do expect we're now going to push back up into the value area from yesterday. Still have that poor low below us. And statistically, poor lows almost always get repaired. Not always. Sometimes we leave them behind, but almost always they get repaired. However, it doesn't have to happen at any particular time. We may push away for an hour. We may push away for 2.5 weeks and then come back and repair it. So don't get too worried about seeing that down there. We may leave that behind today and focus more on repairing these 2-week references. No way, you were a miner? That's awesome. I always thought about getting into it like years ago. I thought about getting into mining. I was going to mine Ether, and I just never did it. I'm not really into computers and stuff. That all would have confused the shit out of me. Jonathan, if you posted a link for that Mark Douglas, those links don't show up. YouTube blocks them. But you can go on like Facebook or Twitter and just direct message it to the Pirate Traders account, and I'll pop it up there. Okay, so now the NDX is bouncing off of its 20. Whoops. And so once again, if we break through that 20, it will increase the odds that the rest of the market pushes higher. Do it, John. Go long. Have a stop. Have a plan. Right? Where's your long trade going to be wrong? At what point do you exit? And then be calm, be patient, and let the time work for you. Okay? The market wants to go up higher. Give it some time. It might need to bounce around before it gets there. If I were you, I wouldn't get worried unless we broke back below this 20 moving average, which will start to curve up here in a little bit. Cool, Jonathan. Thanks for sharing. I'll definitely check that out. I love his book. Uh, Mark Douglas, he's the guy that wrote that Trading in the Zone. That book is probably the best book on trading I've ever read. So I'll check that out. Okay, market breaking back through that 20 moving average on its way back down. Let's see if we can find some support right here at sort of the base of where the volume was a little higher. So the market comes down, call it the halfback of overnight, kind of churns around here and then rotates back up. If not, the market's just still rotational. Internals still mixed, not giving us any good signals. Yeah, Nathan, that's a good observation. We don't treat those as gaps, though. I think statistically over time, you find that if a gap exists within the previous day's range, it doesn't necessarily increase the odds that it needs to be repaired. If the market had wanted to sell off today, it could have just kept going. But that is interesting to note. Also, Fausto, I think it's too early to say that this is rejecting off the 20. This almost looks like it's going to be support, right? It freaked us out for a second, but now it looks like it wants to just like imagine moving forward in your mind. If the market were to keep moving higher, this would curve like this, and then it may just like may have popped above and just be riding that 20 on the way up. Still too early to say, but both are possible. Yeah, if you're still long, John, I wouldn't worry about it. Just wait a second. It hasn't given us a signal one way or the other whether it's going to fall back down or it's going to push higher. The market is still trying to decide. All right, Fausto, it looks like you might be right. It might be working as resistance. Okay, we're now below the halfback from overnight. Yep, ticks are starting to break. Looks like we will get a pullback. Okay, so on the pullback, we're looking for support pretty much anywhere in this area with a lot of volume. If we get below the value area, we're probably going to go repair the poor low. Excuse me, no, I'm on the June. I rolled over yesterday for the contract. Yeah, I'm not sure that statistic is right, Jonathan. 90%? That seems extreme. Why would anyone in the world have a breakout trade strategy, which is a valid strategy, if 90% of the time it failed? that seems like an exaggeration. Man, I got something in my throat. But that is why you now understand why the idea of a look above and fail is so potent. Because if you go long for the breakout and then you start to pull back, you get so nervous, you feel like you got to get out of your trade, and that causes the faster liquidation, which is what increases the odds that you rotate to the other end. So fuck yeah, that moving average is resistance. What I expect now is another rotation down. Like I said, we find support somewhere in here. Or at the worst case scenario, repair the poor high, and then we come right back up and take another stab at it. Yeah, Nathan, that's an excellent point. If I had gone long right here, and for whatever reason I didn't exit my trade when we broke back through the 20 moving average, I wouldn't take my loss. I would wait and add on below value. But that's because I would be able to take all that pressure and still have dry powder to add to it here. And then I would just put my stop, 3 ticks below the poor low. The one upside, I mean, I hate rotational days like this because they're fucking boring and they're hard to call the highs and lows of. But the one nice thing is the market doesn't run away from you. You know that even if you're wrong, you're probably going to find support somewhere in this range. Yeah, I use simple moving averages, not exponential. And 2 minute candles, boy, that must be stressful. Those suckers are changing every 2 minutes, sending different signals. Of course, if it's working for you, keep doing it, but it might not be a bad idea to just spend a day trading like 15-minute candles. And then they change much more slowly. But of course, whatever's working for you.
Yeah, Fausto, when I read through that, I'm just like, oh God. Like, that is too many mixed signals for me to look at all at once. All I need to know that the market is rotating is I just look at this and I go, oh, it looks like a bell that's turned on inside. It's bell shaped. We're rotational. Like that to me is so much simpler than like go to the 4 hour, go to the 2 hour, go to the 1 hour. Is it bear flagging? Is it this? Is it that? Like, ugh, man, just simplify. But if it's working for you, keep doing it. Okay, this H is also weak. H period high. Yeah, no doubt. That's good advice. I know there are people out there who trade the 1 minute and 2 minute candles or the 5 minute candles and make money. I've just never met one.
Sorry, I stepped away for a second. Yeah. Um, back every chart day, every single first attempt breakout failed. Yeah, I mean that's what balancing kind of is, right? It's like they try to push the market higher, they run out of buyers, the market rotates back down. You know, that's the process of rotation is failing to get higher, failing to get lower, failing to get higher, and it just keeps doing that until it breaks out of that range and then it moves higher. Um, so yeah, what you're describing is what we would expect. Okay, we're back above that 20 moving average. So now will it become support for the push higher? Let's wait and see. Market internal still kind of mixed, sending a meh signal. Got a weak H period high again because it's one tick from the F. So who are the people selling that, right? They keep causing these weak references. They're short-term traders. They're weak hands traders. So it's weak hands that are building a short position here. What's going to happen if we break out? They're going to get squeezed. Just something to think about. John, are you trading a paper account or are you trading a real live account? John, not Jonathan. All right, well, I went into the back. I got some sticks for firewood tonight. Got them all broken up and ready to go. Came back, and nothing's changed in the market. We're still just rotational. Fantastic. Jonathan? No, I'm not in LA. I just moved to Seattle, Washington. And it's cold and it's wet, but it's sunny right now, so that's good. Um, I do trade. I don't trade SPX options, but on a rare occasion, every now and then, I'll buy a call or a put on the futures, just as like a more long-term trade, like a trade that I'm holding for 3 or 4 days or something like that. But it's pretty rare. I don't do it that often. ES rejected overnight low. Um, Rejected off overnight low. Yeah, I don't see that. We're good. What, like $5 from the overnight low here? We also created a poor low, which increases the odds we need to come down. And in that excess we need to create, we'd want to find support somewhere around here. Well, John, thank you for the great trade idea. It's a beauty. See, you're learning, brother. You're getting there. But now we're like, we're at the upper end of the range. Let's go ahead and move our stop up to a little bit above break even just to be safe. And now we're good. Now there's no emotion, just profits. But John L., I agree. Just some boring rotation. Oh, they're going to stop me. I'm only going to make $400. Oh no. Boom. Too bad, so sad. I'm just being a dick now. I just want you to know, John, that John Q, that there is a place where trading can be relaxed and fun, and you take the trades and you don't get stressed, and you let them work for you. And if they go against you, as long as you get out without losing money, you don't care. It's such a nicer way to be. You'll get there. See, I wouldn't describe it as they're picking away at the stops. I would literally describe it exactly the opposite. I would describe it as these short-term traders are shorting it over and over and over again, and they're building up short inventory right in here, right? And so when the price moves above it, what happens? They start to freak out, and then they exit market, and that's the rocket fuel for a little jump higher. So I think they're getting shorter and shorter and shorter. We got above the 20 moving average. We came down. We found support multiple times. We're doing so in the NQ as well. Internals still just not telling us anything. Thanks a lot, internals. I mean, the market is sort of trending its way higher. And each little poke at this level is making it weaker and weaker and weaker. And when it breaks, all these suckers that went short, they got to get out of those trades. They got to cover. Well, somebody has to go short, right? Like literally, if somebody bought in the I period low and then the market pushed up to J, if they exited their trade, somebody had to short that. Somebody had to go opposite and vice versa, right? So if the price stops moving higher, if it stops moving here and then here and then here and then here, it means more people are going short than long there. And it's tough to know, are they old business that's, closing out their long trades, or is it new money selling? But it doesn't matter. Somebody's going short over and over again at these levels, and they're getting nothing for it, right? Maybe the B period, they got something for it, but since the F period they shorted, they got nowhere. G period, nowhere. H period, nowhere. I period, nowhere. J period, no. They just can't. They keep shorting it. They keep building up inventory, but they just can't get the price to go lower. So if that price does poke up here, oh man, they're going to get scared, right? And so that's when you get the squeeze. Now, what is a very realistic and likely possibility is you get that short squeeze, you get some good excess here into the upside, and then you rotate right back down, right? Because there aren't new money buyers to enter the market there. But I do think you're going to get a little squeeze to the upside and get some nice excess. Actually, that's a misinterpretation, Fausto. The SPX is controlled entirely by options. Whether it goes up or down, it's all about options. However, there are algorithms that arbitrage. So if the S&P 500 futures or the SPY ETF or the underlying stocks or whatever start to go up, and the people who are trading the SPX are pushing the price down, bots will come in and buy a bunch of calls and push it up until it gets even again, and then they'll close out those trades. And it's happening like in a fraction of a second all day every day. Yeah, SPY you can sell short. You can sell everything short. Yes, sir. Shiri, I don't know if I'm saying that right, or Shri. I trade pretty much just the ES. I used to trade both, but then I just found it was too distracting. I'd get into a trade on NQ and then I'd be trying to watch ES and I'd get stressed about the NQ one. So yeah, I just trade only ES now. You do see doji after doji. There's a lot of uncertainty here. No one can pick a side. This is not stimulus money activity. Yeah, you're absolutely right. I mean, this isn't. Again, this is just normal market rotation. When you have, 3 or 4 days where the market goes straight up every day, you need a few days where the market goes sideways. So this is just normal market rotation. Nothing to be one way or the other about. Just requires patience. I don't know what power hour effect is. Shri. Okay. Shri. It's a cool name. So yeah, is this consolidation? Yes, that's what's happening here, right? The market is balancing and that range is getting tighter and tighter and tighter. It's like a rubber band that's getting pulled back tighter and tighter and tighter and tighter. And so eventually it causes a break. In my opinion, that break will be to the upside. Could be wrong. We have more weak references below than we do above. But just overall momentum of the market and obviously higher lows pretty much consistently throughout the day here. We're forming kind of like a triangle pattern. Usually that breaks to the upside. So yeah, that's what I think is going to happen. The question is when it breaks, what happens, right? Do we just, take out all those stops that I was talking about earlier, get like a little bit of excess up into here and then rotate right back down? Or do we push up and then start rotating up here, right? And then finish the day up in this area. I can't be certain of one or the other at this point, but that's what I think happens. As far as this poor low goes, it's tricky. Sometimes we leave them behind. We may get a push higher and then come back in a week and repair it. It's really hard to say. But we shouldn't forget about it. It's important to note. I just don't think it's going to hold us back today necessarily. Yeah, coming back from lunch. I think they'd be back from lunch now. It's like what? Almost 3 o'clock there. Yeah, I mean, that's a totally fair assessment, Fausto. Anything could happen here. Like I said, we could get above the high here. Say 3 or 4, 5, 6, 7, 8 ticks, whatever. You get above the high, and then you literally just come like M period comes in and it's just like boop, 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 and it crashes and repairs this weak reference here. My point is just that the day isn't bearish to me, right? Even though value is a little bit lower, it's just balance. The market just needed to cool off for a second, and that's all this is. All right. Is it going to happen again? Are we going to get another short here? Or are we going to finally get our little pop, our little breakout? Let's wait and see. Again, creating a poor high. Okay, so that's good excess. The market could pull back here, but let's see how much more legs it's got to the upside. First resistance was the closing price of yesterday. Opening price of today, that's what's actively working as resistance. Next stop is half back from yesterday, and then the POC from last night. So the half back is at about 39.29.25, and the POC at 39.32.50. John, you're killing me, bro. You're waiting till now to go long? Could have gone long here, could have gone long here, here, here. But you waited until we broke out? We'll get you there, brother. We'll get you there. It's okay, bro. Don't worry about it. Just be ready to take profits quick. Because, like I said, this could be where the market stops and reverses, or this right here. And if it starts to rotate down, it could come to repair all these weak references. So just be ready to take your profits quick. It's a perfectly legitimate short for the rotation back, but you're probably going to get squeezed a little bit. Ah, oh, great. Well, John, yeah, then go to town, man. Yeah, I mean, on the idea of going long and short at the same time, you should only ever do that if it's a hedge. Um, but if it's out of uncertainty, then you shouldn't take any trade. You sit on your hands and you watch. Also, for you on the June contract, or are you still on the March one?
Yeah, man, that would have been. Wait, let me go back and check the level here. What'd you say? So 39.14. This is a lesson in discipline for you guys. Okay? So he went in at this level, a few ticks above our opening price last night. Okay? And he sat all night. He let this trade down, freak him out. He sat all morning. He watched the A period trade down. He watched the B period, the C, the D. He got real nervous in the D period, but he just sat patiently. Then he felt like, oh, finally some relief. Nope, they pull back. Relief, pull back. Relief, pull back. So, yeah, Asif obviously can control his discipline in his positioning. Better man than me. Philip, I use AMP. AMP Futures is the broker, and then I use TradingView as the platform that I trade on. But that's not me suggesting that those are the best. They're just the first ones I tried, and they both work great. I've had no complaints. But I've heard lots of great things about NinjaTrader and Sierra Charts and lots of other ones. So that's sort of a do your own research type of thing. John, I get it. Uh,
Okay, well, they didn't get much of a short squeeze out of that. They only got 3 ticks of excess, or 4 ticks. So that makes me feel like we might need to come back down and repair these weak references here inside of value. Market internal starting to look a little bit better, but still not giving us much. In terms of a bullish, case moving forward into next week, it would be nice if the market could get up here into yesterday's value and build a little volume so that we pull the value area of today to overlapping to lower, right? Because the value area being clearly lower is actually a signal of further downside continuation, but I don't think that's what's happening. So I'd like to see us put in a little bit of volume up here so that we can pull this little blue box to overlapping the one from yesterday. Created another poor high. Man, it's all short-term traders picking each other's pockets here today, folks. Thank you for the like, Shree. Really appreciate it. Yeah, Zuba Z, you're. I don't know if I said that right. Zuba Z. Yeah, you're on the ESH. You want to be on the ESM, or I suppose you want to be wherever you want to be. I'm on the ESM. Brady's looking for an entry. Which way you want to go, Brady? You want to go long? Or you want to go short? To be honest with you, right now I don't see an entry at this point. I saw a good trade buying the dips here for the breakout of the high, but we already got that, and then we created a poor high. So now it's tough to find an entry either direction. On a rotational day, your safest bet is often going short above value for rotation down to the POC. You do have, weak references, a bunch of weak references here and a poor low. So that's all going to increase the odds the market will rotate at least to take out the first couple poor references. Weak references. But the risk reward of it doesn't feel good to me. So I think it may be a little late in the day. Also, we're 15 minutes from the M period, which I find to be notoriously tough to call. It acts sporadic sometimes, and it acts often with a lot of volatility. So, trade at your own discretion. I could see a trade long or short here. Yeah, Subazi, you're welcome, man. Please ask all the questions that you'd like. That's the point of the channel. Yeah, speaking of channels, look at this. It's not quite perfect, but it's pretty freaking close. The NQ is a lot messier, but the ES, that's pretty clean, man. A wise man. Asif, always a wise man. And usually right about the M period. So, yeah, we got a lot of weak references. We created a poor high, right? Once you create a poor reference, you often push away from it before you come back to take it out. So maybe this L period low was the push away, but there's just risk that it could be further downside. One trade, if you hold over the weekend, would be if the M period does give us a liquidation, to buy that dip, but you'd have to hold till Monday. So that's up to you what you like to do. Do it, Andy.
Crack one open for me, brother. I did back in the day use the Thinkorswim for futures, but they kill you with the fees, man. So I just stopped. Plus, they don't have great fills. If you put limit orders in, sometimes they don't fill. Congrats, Street. That's pretty awesome. Put that money in your pocket and have a great weekend, you know? Okay, never mind. You still have work to do. Get back to work and make some more money. I spoke too soon. Yeah, I've had that happen to me with every software provider that has those DOMs. That's just how they do it. It's a nightmare on the NQ. If you try to use that on the NQ, man, oh, when there's volatility, it moves so quickly. Okay, still poor. Need one more tick of excess to the upside to repair the poor high.
Yeah, those little things happen sometimes. You just have to remind yourself it's the cost of doing business. You know, sometimes little glitches are going to happen and stuff like that. It's fucking annoying, but it's unavoidable. All right, so that's good excess on the L period. That gives us a green light to move down, although 29 contracts is a little weak. All right, Jonathan. Good to see you, man. Have a good workout. We'll see you on Monday. All right, the M period is upon us. Hit me in the chat with your predictions. Are we going to go higher? Are we going to go lower? Where are we going to end up? Speak now or forever hold your peace. Thanks, Scott. Have a great weekend. All right, Ryan says we're going higher. John, I assume you meant 39, 29, 50, but that's cool. A little higher. Higher. $43. Wow. RK really thinks we're going to get a push at the end of the day. Could be. Could be. 39.13. Rotation back down to the lower end of value. I can see that. What else you got, chat? Hit me with it. 39.25. Staying at about the same level. $39.50. Shit's getting real. What is $39.50? Oh, that's a all-time high. I don't think we're gonna get an all-time high off the back of a balance day, but could be. Okay, Dr. Vijay seeing 39.33, then the pullback. So we're getting up to the POC and then rotating back down. I could see that. $3,900. It's doable. It would take quite a sell-off and we'd be getting below the overnight low. But yeah, that's within possibility. Although, Jesus, is my computer frozen or is the market going nowhere at like the slowest tempo ever for the M period? $39.31, yeah, okay. I know, RK, I'm just fucking around. Okay, 39.22, a little bit of a pullback just to the top end of value. $39.14 to $39.20. Okay. Yep, pulling back into value. Okay, well, we got good excess here in the M period, a good high. Does it keep going higher or not? $39.35. So Asif thinks we're going to get up here. We're going to get a couple ticks above the POC, and then that's going to bring in the sellers down to $39.11, down to the low of the value area. Okay. Well, he's right an awful lot, and we're right up on the edge. So let's see what happens. This feels more like a short squeeze. Like, finally, people are giving up on their shorts. Awesome, Philip. Glad to hear it, man. We'll see you then. Okay, Stan sees a rotation back down. We would repair the first of these weak references. I could see that. It just feels like there's nobody even trading anymore. Like the volume's falling off the map, the tempo's so slow. We had a little exciting short squeeze and then we just stopped again. Everybody's already gone home for the weekend. Oh, there's plenty of time. Yeah. 20 minutes is plenty of time for the M period. It can move all over the place in that time. SPY's at an all-time high. Not on my chart. I'm seeing the all-time high at 395, and I'm seeing SPY at 394. Or was that a prediction? Stan, you have the most ridiculous dad jokes ever. Every single one. I love it, though. Keep them coming. Also, I just noticed I'm up to 420 subscribers. What is happening? I had 350 this time yesterday. It took me forever to get there. One of you is doing something. One of you is marketing for me, and I want to know who you are, and I want to give you a high five. It's probably Stan. But in light of it being 420, I might have to get high as a kite tonight. I mean, it just seems appropriate. Oh, is that what it is? Somebody posted on Top Step? Ah. Well, whoever that was, thank you. I've been working so hard to try to get people to check out this channel, and I've just had more growth in the last 24 hours than the last 6 months. RK, thank you as well. I appreciate that. Do it, Rocky. Dude, you guys, I appreciate that so much. You guys have no idea how much that helps. It just means the world to me. I really appreciate it.
Murder algos? You mean you think there's going to be a volatility pop? The tempo is just disgusting right now. The market's just going nowhere. So you think in 3 minutes we're going to get those last minute algos that come in and push us somewhere? Let's see what happens. Peon? I'm not sure that's the way you're supposed to write that. I don't know that I want to be referred to as a peon. Is that the right way to write that? I don't even know. Thank you. Is it Deck D? Deek? Deek D? Appreciate it, brother. Okay, yeah. I don't think I want anybody peeing on me. That just doesn't sound pleasurable at all. The only disappointing thing about the lack of volume coming in up here at this level is we're going to end the day with value lower. And that's not good. You know, if we ignore our previous biases and we just look at market generated information, ending the day with value lower and this many weak references means we might need to come back down here on Monday and test these levels before we can move higher. So it's a little disappointing. I'd hoped we'd put some volume in up here and pull the value area up. Oh, it's so muted. There's nobody trading. Everybody's just watching. There's just no volume.
Well, looks like I was a little early, marking that as the high for the day. Whoopsies. Market wants to go higher. Exactly. That's why I don't trade in the M period. Because it's fucking unpredictable, man. It do what it do. They're going for that late day push. Here they go. Didn't Osif call 39.35? What if we tag it and then go right back down? All right, Stan, have a good one. Thanks, Steve. You too, brother. All right, I'm just going to go ahead and call this a spike. I don't know if it technically should be, but I'm going to call it a spike so that we have something to look at on Monday morning. Thank you all so very much for joining me. What a fucking awesome day today was. I appreciate all of your support and sharing my stuff, and I love you, and I hope you have an awesome weekend. Thank you so much. Bye-bye.